On behalf of BIA, I wanted to welcome everyone to our webinar today, which is called Developing Your China Strategy. My name is Josh Berlin. I lead business development and China-Asia strategy for BioCentury. BioCentury is honored to serve as a supporting organization for this webinar, which continues a long tradition of BIA and BioCentury working together on China biotech-related projects. In particular, I wanted to highlight that BioCentury organizes a China Healthcare Summit each November with a group called Bay Helix. We also organize the event in collaboration with McKinsey & Company, which produces a great conference report each year on the China biotech ecosystem. Last year, we had record attendance from UK and European biotechs, and we hope to continue that momentum with our 8th China Summit this year, scheduled for November 16th to 19th as a hybrid event. So we'll have a venue in Shanghai plus full access via a digital platform if you can't travel to China. It's a great opportunity for UK biotechs and others to present themselves in front of the right investors and partners. And we hope to see you all there. BIA is a supporting organization for this event, so anyone who's a BIA member will receive a special discount. We're also receiving now inquiries and also applications for companies to present. So please visit biocenturychina.summit.com if you have any other questions. So with that brief pitch, I wanted to now talk about today's webinar. We're really fortunate to have 3 great speakers on the program today, and they'll help us learn more about the China market opportunities and challenges for both UK and European biotechs. We will start with an overview of the China biotech market from Fangning Zhang, who is a partner in McKinsey's Shanghai office. Then we will hear from Mark Headley, who's the Director of Knowledge Economy at China Britain Business Council, and he'll provide us with a practical guide on how to do business in China. And then finally, we'll have Sven Adsten of Algeo Capital and Business Solutions, who will discuss recent cross-border deals with China investors and lessons learned for UK and European biotechs. We will also, of course, save time at the end for your questions. So please feel free to ask a question at any time via the questions tab on your webinar screen. And then I'll collect all of the questions that are submitted and ask a few at the end, time permitting. So we very much would like to hear from you, so please feel free to ask those questions. So with that brief introduction, let's get started. I will now hand the program over to Fangning Zhang of McKinsey to provide a brief overview of the China biotech sector. Fangning?
Great. Thank you for the introduction, Josh. So what I wanted to share in the next 20 minutes or so is to provide an overview of how we are really seeing the fast and potential and accelerated evolution of China biopharma innovation. So I wanted to touch on this topic through 2 lenses. The first one is really taking a bird's eye view, really from top-down point of view, how is the China innovation ecosystem has been evolving. I'll share with you how we're setting up the framework and how we have been tracking and measuring these progress. Then the second one is really looking at the biotech companies. Many of you probably are already collaborating or looking for potential collaborations with these Chinese innovators. So we'll highlight some of the key trends that we have observed over the past 1 or 2 years. So let's get started on the first question. So when it comes to China biopharma ecosystem, there's many ways to look at it. So we actually collaborated with Bay Helix 5 years ago to come up with a framework. So we defined these 5 dimensions of ecosystem. Number 1 is the policy environment that includes both the regulatory to get your products approved, as well as the market access to get your products reimbursed. For China, it's still very much a public payer system today. The second is really the funding. Is there sufficient funding? Is there sufficient exit options for the innovators to really have the momentum? The third is capabilities infrastructure that includes end-to-end from research to development. The fourth is the innovation output. Are there innovative products being produced in this ecosystem? And last one is how China is really connected, integrated into the global community. So the short answer, so the way we conduct the survey, we just ask a bunch of questions to really the who is who in the China ecosystem. So that includes the CEOs of the biotechs, leading investors, professional service leaders, and executives from multinational pharma companies. And as you can see that each year we take roughly around between 60 to 130 executives to provide input. So we are quite confident that this really represents a breadth of the take. So there are a few messages I just wanted to come across, send across. The first one is if you look at the bottom, the score every 2 years between 2016, 18 to 2020, you actually see quite rapid progress, right? If you put these on a relative scale. So that's one. So I think that's really a confirmation of this overall accelerated momentum of the ecosystem progression over the past 4 or 5 years. The second message is not all these dimensions are progressing at the same pace. We see actually two really say the leading factors. First one is regulatory. So many of you probably have heard about the regulatory reform that has been initiated back in 2015. And this really has been a very important catalyst to unlock a lot of the entrepreneur energy coming from the investors and from the startup executives. And this momentum is not stopping, right? There's still as new policies continue to be rolled out to support the innovation. The second leading factor is the funding. So there are multiple forces driving that. We see certainly there are many VC and PE firms, both foreign and China-based, are very actively getting into healthcare and ramping up their financing as well as investing. In addition, we also see that in terms of exit options in China, this landscape has also rapidly evolved over the past couple of years. Worth highlighting that for the Chinese companies now, in addition to NASDAQ, they could also choose to get IPO'd on Hong Kong Exchange or in the China main board, STAR board, which was initiated most recently. So this really provides additional vehicle for companies both to get additional funding and therefore has the confidence to derive value for the capital market. And there are the last three capabilities, innovation and integration to global. Really, it's a steady progress. To some extent, I think that's also much expected. So we'll share some of the details in the following pages. Just touch on the first one, right? Looking at the impact of regulatory reform, you will actually see as a result of that, there is certainly more products actually are getting into the pipeline, getting into the clinical development stage every year from these in China. And I want to highlight on the left side, if you look at the darker blue boxes on the top, this is the share of IND molecules by Chinese biotech companies. By 2020, they are actually accounting for more than half of the molecules entering clinical stage. So this really is a very strong sector, very rapidly growing sector that worth monitoring, and that's why we'll share a little bit more of our observations in the later stage, in a later topic. The second, we talk about funding. So some of you might ask, okay, how has that really been demonstrated in terms of capital market? So the short answer is there has been actually substantial value creation in the capital market by these Chinese innovators. So we break down by different IPO vehicles, as well as we also included the CRO, which actually is another booming sector over the past several years. In short, you will see that by 2020, last year, over 200 billion USD market cap has been generated, and I'm sure the number has continued to rise as we speak. And the financing story is also not just a China story. If we are trying to really map the biggest, the top fundraising from early stage, late stage to IPO, you actually see China really is getting on the map. If you take the IPO as one example, since 2018, China actually has taken 7 out of the top 10 IPO in terms of the capital being raised. So really, China innovation is not only a China phenomena, it's becoming a global phenomenon. The last question is around, or dimensions around integration. So certainly many of you are aware that Chinese companies over the past years actually have been very actively looking for in-licensing opportunities from the innovators across the board. So every year, right, you see the top of, in terms of the number of deals, as well as the breakdown of different TAs, you see actually it's a quite breadth of TAs. Oncology certainly is a hot area. But it's actually a very healthy volume of that licensing deals has been happening. And on the right side, you see some of the probably more well-known deals that happened in 2020. And beyond the licensing, we actually see that there are actually different ways companies are exploring in terms of partner up with Chinese companies, right? Last year, for example, Pfizer actually signed a kind of multi-pronged deal. They took actually stake of CStone, which is an oncology-focused biotech company. They will be taking the China commercial rights of their lead IO asset. And in addition, they actually have an agreement to co-develop some of additional innovative assets, which this year, right, earlier this year, they also announced a deal. Another example probably is looking at for the commercial collaboration. So we take, for example, Hua Medicine focusing on diabetes, actually have partnered up with Bayer to help them to commercialize their lead assets in the coming years. So there's actually many collaborations and partnerships already happening also between multinational companies and China innovators. And these collaborations is actually not limited to China. So especially 2020, we see a kind of step up in terms of the number of assets that Chinese biotech companies have been out-licensing to global partners. And also not only the volume, but also if you look at the deal size across the board with these three examples that we show here, is actually quite significant. So again, this is probably an early indicator that for some of the companies, when they have a globally relevant asset, they will not shy away from teaming up with global partners to realize the value and bring their drugs to their patients. So hopefully that gives you a really So I'll get to my next topic is really looking at the Chinese innovators. So we focus on the Chinese biotech companies. So certainly every year the story and key theme change. But if we look at the past 12, 18 months or so, we really want to highlight three trends that we see that are interesting. The first one is the Chinese innovators, they are actually becoming faster. So many of you probably have heard a lot of Chinese companies fast follow strategy. Right? In the past, probably several years ago, the Chinese company would initiate a clinical trial after U.S. companies get, or the Western companies already get breakthrough approval. And then later on, you will see actually Chinese company will initiate once they see a global proof of concept. Now actually increasingly see companies actually getting earlier in the chase, even almost like trying to get into a global top 3, top 5 players in the early stage development. So that's the first trend. The second trend is differentiation. So why Chinese companies really have to look for differentiation? I think there's a couple of reasons. Number one, there has been a very strong Me Too scenario that has taken place in some of the targets or MOAs. IO probably is one of the areas that has been overcrowded. So as a result of that, both investors and biotech companies actually see that really is not a viable strategy, especially when these assets actually get to the market, right? The competition is very fierce, and the pricing environment is also quite challenging if you have many options or alternatives to choose from. The second underlying reasons actually for for the leading innovators and some of the next wave of Chinese innovators, they're really setting the aspiration of not only playing and succeeding in China, they also wanted to really capture the global market. So for them to do that, an important factor is actually having a differentiated assets that are globally relevant and competitive. Which leads to the third trend is actually that you started to see companies taking that initial step in developing their products, or at least starting in the clinical trials in the Western world, as well as licensing their assets through commercial partnerships. So just a little bit more flavor on these three trends. The first one, we're using some of the MOAs that actually has been approved both in China and in US. What we really want to highlight is the last column. We're looking at the delta between the US first launch and the first China local launch. So if you look at it for EGFR, the gap was 8 years. And then when you get to the PD-1, the gap becomes 4 years. I'm sure there are, for some of the newer MOAs, the gap is shortening. So this is more of a lagging way to look at it. But this already provides you a view that increasingly the Chinese fast follow strategy would actually have a much shorter window or lag compared to the first runner, the front runners. Then the second theme we talk about is differentiation. So what do we mean by differentiation? Many would say, okay, first in class, which is true. Certainly that's one of the ways to really to show the unique and being a front runner in the TA or in a mechanism of actions. So we see that company like Junshi, Akeso Bio as example that have actually taken on that path. But beyond that, there are also alternative ways, right? We see, for example, I-Mab have really worked on CD47 and one of their lead assets, trying to solve a potential side effects or safety challenges, and by doing so, setting the path to become a potential best-in-class in this category. And beyond that, we see also AlphaMab, right, taking a route of administration as another way to differentiate for their PD-1 asset. Another area is actually technology platform. I think, at least in our view, the Chinese companies actually, in the past, right, if you look at 3 years ago, you probably see much fewer companies that have a technology platform play. But now, increasingly, we see companies like the ones we listed here, such as Apimab with their bispecific platform, etc. Companies started to see taking this route as another way to not only being able to provide molecules or assets to fuel their own pipeline, but also sets a way for them to partner early on with other companies, including the Western players. We talked about the last trend is going global. So in addition to the deals in terms of commercialization and that we have seen, in development, the Chinese companies are really also branching out. So we take the US, some of the accelerated designation pathway as an example across fast track, breakthrough, accelerated approval, and orphan drug designation. These are just some examples of Chinese companies play. But these, I think, the way I look at it is there are multiple companies. It's not just one company's strategy. There are multiple MOAs that companies are pursuing, which means that this is really not only a single company's strategy. There's a common theme that the leading ones have at least the aspiration to really pursue the Western market, in particular in the US. So that's a very short walkthrough, but hopefully give you a quick view of how we're looking at it. I think probably a few messages from me to wrap up. The first one is China pharma market as the second largest market remains very attractive and will become increasingly important for any biotechs or any innovators globally as a market to pursue. Number two is the way you play in China actually there are multiple ways to play. You could set up your own shop, as many or some of the biotech or mid-sized companies has done over the past years. You could out-license your product. You could partner with companies beyond one single product, and you could actually eventually set up your own entity or vehicle in collaboration, in some cases with another investor. So there are different ways really to get into the China market. The third one is, as you are looking for these collaborations, rest be assured that the Chinese companies, these Chinese biotechs, as example, are very eager and very keen to find really the right partner to work together. There are a lot of technology innovation that they would find synergistic, and there's potential that the collaboration could go beyond the China market. So let me stop here, and I will hand over to the moderator.
Great. Thank you so much, Fangning, for a really in-depth presentation and a lot of food for thought for folks. Just a quick reminder that you are able to ask questions. We will save some time at the end for your questions. So there is a question tab that should be on the right-hand side of your screen. So feel free to type a question at any moment, and I'll collect them all and ask a few at the end. So I wanted to now turn the program over to Mark Headley of the China-Britain Business Council, and he's going to give us a practical guide on how to do business in China. So Mark, take it away.
Thanks, Josh, and good morning, everybody. I think just building on from Fangning's presentation, which was fascinating in terms of just the pace of the change that we've seen in the biotech sector in China. I wanted to focus a little bit more closely on sort of some of the practicalities of doing business in China. So I've called this section a guide to doing business in China, but I'm very conscious that doing business in China is quite complex, to say the least, and 10 minutes doesn't really do justice to it. So we'll be scratching the surface a little bit here. I'm also conscious that there are some businesses on the call that maybe aren't based in the UK. Just to introduce briefly the China-Britain Business Council, we're the main organisation that acts as a bridge between the UK and China. So we're a very broad church. We're a membership-based organisation with around 600 members, drawn from all industries and sectors. So in the healthcare and life sciences sectors, we have a very active programme working closely with the Department for International Trade, and we support companies of all sizes really to help them to enter the China market. So that includes big pharma companies like AstraZeneca and GSK, but actually the majority of our members fall into that sort of SME category, and we work with many startups and scale-ups, helping them to understand China. So I think that particularly for small businesses, smaller businesses looking at China, it can sometimes seem like an overwhelming market in terms of its size and scale. You know, we're talking about a country with 1.4 billion people, you know, the third largest land mass. And, you know, that means that there is a lot of opportunity, but accessing that opportunity sometimes can seem quite challenging. The map on the left is just showing the provinces in China by their GDP country equivalents. So actually, when working in China, you sort of have to have a mindset that you're working in a continent, and there are significant differences between different regions in China in terms of the healthcare systems, and whilst there's a lot of national regulation, actually the way in which healthcare policy is implemented at a local level varies considerably, both between provinces and between cities and more rural areas. And also traditionally, the biotech and pharma space in China has been more fragmented, and to a certain degree it's late to the party in terms of the development of the industry. However, I think that you could do well by focusing on some of those key urban conurbations where a lot of the biotech companies are clustered. So on the right-hand side there, you can see that a lot of those businesses tend to be located in 4 distinct regions. So the kind of Yangtze River Delta region around Shanghai, Jiangsu, Zhejiang region, the northern part of China around the Beijing, Bohai Rim, where there's a lot of academic institutions and obviously the key regulators are based in the capital. And then you sort of have that Greater Bay region around Guangzhou and Hong Kong, where there's a huge amount of innovation. And increasingly, the development of the West means that biotech and pharma businesses are prioritizing those kind of Western regions where China has a huge population in those areas. So I think that in terms of approaching the market, it's important to kind of think regional, but also look to leverage the infrastructure, the talent bases that exist that already exist, and also those policies whereby there are regional innovation zones, and there's a lot of benefits to being based in one of those key clusters or working with companies in those areas. Clearly, doing business in China, China is there's a lot of regulation that exists. To be honest, for all businesses in China operating in China have to face with quite a bit of red tape and bureaucracy. Clearly, healthcare and life sciences is an area where there is a lot of regulation around bringing products to market. So I think initially for businesses that are new to China, spending some time understanding the regulatory ecosystem, who the key players are, and also developing some relationships there is potentially quite meaningful. And I've just put a few of the key regulatory bodies up here, including the NMPA, which is responsible for medical product registration, including drugs and biotechnology products. But other organizations such as the CCMHPIE, which is a MOFCOM association for medical technology that's also critical in terms of bringing products to market. In terms of regulation, I mean, there is a raft of regulations, obviously, that you have to apply, you have to understand in order to have products registered and approved. And obviously, all of this is available to go and take a look at. And also to be aware of kind of the flagship headline policies that drive innovation in the sector in China. So the latest 5-year plan came into force this spring. And, when you look to those policies, you will see exactly where China's priorities are moving forward, whether that's in terms of developing the genomic sector, biotechnology in agricultural applications. There's a big focus on green development and net zero. So you can see within these policies the direction of travel for the Chinese government and where the areas which are incentivized. And clearly biotechnology is an area that is seen as being critical to China's broader objective of seeing GDP growth which is more aligned to innovation rather than that traditional reliance on exports and investment. Other key flagship policies, obviously, there's the Healthy China Policy 2030, which is a sort of medium to long-term strategy focusing on 5 key areas: so public health, environmental management, medical industry, food and drug safety. All of which goes into quite a bit of detail in terms of the priority areas and where we're seeing the investment, which I think links into some of the areas that Feng Ning mentioned earlier. We can't also forget the wider geopolitical context, and I think it would be remiss of us not to kind of mention that today. Clearly, the last 2 to 3 years, we've seen a major breakdown in relations between the US and China in particular, but also the UK in terms of some of the tensions around Xinjiang, the situation in Xinjiang and Hong Kong. This is something which almost is it's very difficult to predict. I would say what will happen on a weekly basis in terms of UK-China relations, and it does affect businesses. It does affect your ability to engage with authorities in China. It may affect how your partners perceive you as a UK business. What I would say about this is it really does pay to understand where the red lines are on both sides, in China and in the UK. Clearly, the UK has new investment laws which have come into force, or coming into force very, very, very soon, which will manage and have much more control over inward investment into sensitive industries, including biotechnology. So that's something to be aware of if you are engaging with Chinese investors, to actually and also make them aware that there is a higher threshold for them to move forward with investment. But also, I mean, I think not directly relevant, but the issues that many Western brands have had in China, the way in which they've been affected by decisions they've made to, for example, to stop working with Xinjiang-based cotton producers, has had an impact in terms of their brand reputation in China, with Chinese people boycotting the brand and so on. So I think that what this just means is that you have to kind of understand any actions that you take on either side, how they will be perceived and how it may affect your reputation in China. On the plus side, there is an opportunity for greater collaboration with China. One of the big success stories around the COVID period was the fact that there was quite a lot of collaboration with China on the vaccine program. We just 2 weeks ago held a meeting with China's Premier Li Keqiang and with FTSE CEOs, and I think there is perceived to be still a lot of interest in promoting trade and investment between the UK and China, because as that innovation, demand for innovation grows in China, I think that the UK has a lot to offer. Just in terms of practical questions that tend to come up with innovative businesses in China, obviously IP, intellectual property, is a key one. There is generally, I think that the view of China is that it's a high risk market in terms of IP protection, and historically, drug manufacturers have found it difficult to ensure that their patents can be commercialized in China. But that has, we have seen a lot of change in recent years with new changes to the Chinese IP system, establishing a drug patent linkage system, and overall, since probably about 5 years ago, when specialist IP courts were established in the major cities in China, we've seen far more cases of successful litigation by Western technology companies, and Chinese companies are also increasingly using the IP system in China to protect their interests. Having said that, what we would always say is, make sure that you understand what you need to do, and that China is IP rights are territorial, and IP rights have to be registered in China, including trademarks. And if you lose your trademark, then it can be very difficult to get it back. I saw this week that Amazon has been banned from using its AWS logo in China because there had been a preemptive registration by a Chinese company. So even big companies have to deal with this issue. So it does pay to take early advice from IP specialists on how to protect that. Funding also mentioned that there are different models to adopt when setting up in China. So the wholly owned foreign entity, 100% owned business, joint venture, and other models such as licensing or working through distributors in China. All of this is complex but not insurmountable. I mean, setting up legal structures in China takes a lot longer than other jurisdictions. The process is much easier in major cities than perhaps in more remote locations due to the familiarity with working with foreign investors. And actually, one of the benefits of the US-China trade tensions has been that China's perhaps accelerated some of its foreign investment reforms to make it a bit easier for Western businesses to set up. And actually, this can be done. I think that you need to think very carefully about a number of things in terms of determining which structure. Whether you need local staff, whether you're engaging in local R&D, the level of control that you're looking at, IP, resources, etc. So there's a lot of good advice and information out there for companies who are more interested in understanding their different options. I think there are a myriad of other things to consider. Data, access to data in the China's healthcare system is traditionally more difficult for Western healthcare businesses. China's introduced a number of new laws, data privacy and data security laws that are complicating it. Also some security checks for certain types of technology. Clearly, if you are looking at working with a partner, a JV partner, an investor, due diligence and putting the right contracts in place is important. Also, just simple things like how to get your money out of China, repatriating profits, and taxation and how all that works can sometimes trip companies up. It's not China is a capital controlled country, so repatriating funds can sometimes be more challenging than other markets. And recruitment, finding the right people for your business, whether that's highly skilled researchers or whether it's production level people. China tends to have quite high turnover of staff, and so there are challenges there. And of course, digital marketing and PR works very differently when marketing your business. We don't have Google, Facebook, Twitter, etc. So, building a Chinese website, overcoming the firewall, using WeChat and other kind of leading Chinese channels to market your business is also something to be aware of. And then I think finally, culture and communication. And I think that this applies to most East Asian markets that you might be working in, whether it's Japan or Korea. But understanding that there are also subtle differences between even those markets. Language, yes, sometimes it can be challenging to communicate if you're not a Mandarin speaker, to understand the subtle differences in the way that Chinese organizations work, where decision-making power lies, spending time to develop those personal relationships, often in terms of establishing good business working relationships, perhaps takes time. And all of this, of course, is complicated by the fact that we can't travel to China because of the pandemic. So all these things are, challenges, but obviously that's something that the CBBC is there to support with. So I know we're running a bit short on time, so I won't spend too much time on this. What I would say is that please do visit our website. We also have a number of free reports for you to download. And also we recently launched a chat bot, which is a useful way to log on to this website and have a conversation, a guided conversation, which will curate the most relevant information to your business about doing business in China. And of course, we'd be happy to speak to you for anyone that wants more information about how we can support. So that's it from me. And with that, I will hand back to Josh. Thank you.
Great. Thank you so much, Mark. So a lot of opportunities, but also some challenges, obviously, that need to be successfully managed to be successful in China from a UK and European biotech perspective. I have seen that we've had several questions now submitted, so we are taking questions. You can submit them using the question box on your webinar screen, and we will save time at the end for a few of them. So please continue to submit them. I'll now hand the program over to Sven Agsten, who's the co-founder of Agio Capital, and he'll discuss recent lessons learned for UK and European biotechs on some of the deals he's been seeing. So Sven, please take it away.
Thank you, thank you. Can we see the screen now? I think we can, right?
We can, yes.
All right, okay, sorry. All right. So basically, our company has been doing deals between European biotechs and Chinese partners and investors. And the interesting part is this has been going on for us. We started only 3 years ago, and it says a lot about what's happening in China over the last so many years, basically. Because I think if you started this business 5-6 years ago between Europe and China, it would be very little interest, because then they were looking at the US. But given the fact of the geopolitical tensions that being mentioned also just now, and of course the fact that the US is more difficult for Chinese in general, they tend to look much more towards Europe. And over the last 12 months, we've done 6 deals, which is our licensing deals between Chinese partners and European partners, or investments, or a combination of that. And of course, there are certain trends that we are aware of, and I think it's very interesting to go over these and see exactly what's happening in the space at this very moment. And some of the trends, of course, have been mentioned before, but we have some practical examples of how it really works if you deal with Chinese investors and/or partners. So basically, if you look at the Chinese market, that there are about 500 life sciences funds in China from different sizes and shapes and forms. Some are very new, some are longer. And the average size is 700 million, which says, of course, a lot about the money which is available, of course, in this space. And it is very interesting to see that, of course, lots of that money is being spent in China on healthcare projects, which leads to China has an issue of there's not enough technology, there's not enough talent, but there's a lot of money, which leads to crazy valuations in the Chinese markets, 5 to 10 times higher than Europe, for instance, or even more sometimes in some sectors. And of course, that also means that a lot of Chinese are looking in towards European technology and licensing and investing, because of course it's relatively cheap for them to license in and work with European partners. Now, the Chinese funds, of course, there are different funds. It's very important to understand, do they focus on early stage or later stage investment? Is there focus on therapeutics, diagnostics, medtech, healthcare services in general? And it's very interesting what we've seen over the last 6 months to a year. Many funds start to have a more holistic view and more like system investments. They would say we would invest in a CDMO, and we do invest in a CRO, and we do invest in oncology and in immunology, and we invest in different sectors. And also medtech, and very often they create like this their own small castle, so to speak, which they create an integrated ecosystem where the different investments, the different portfolio companies can work together very often, and that creates a double synergy for them, so to speak. So that is really a trend what we see. What's also, of course, very interesting and important to remember if you deal with any Chinese investor, then of course, are you dealing with a domestic fund or a cross-border fund? And domestic funds are RMB funds, which if they invest abroad, they need to do ODI, so overseas direct investment, so the whole procedure basically, and they have to change their renminbi into dollars. If they are cross-border funds, they already have US dollars in the fund. They might have a lot of Western LPs, or it's just already regulated by the government. So it really depends. It's very important who you deal with exactly, and of course the reputation of these funds also. They're always looking for synergies with their portfolio companies. So the question is very often they would say, well, maybe we also like you to have a partner in China. We could invest in your company, but we'd like to have a partner in China also. The question is, do you need a specific China angle? Which we'll answer a bit later. That's a very relevant question for many Chinese investors, and there's a very good reason why they say, well, you do need a China angle. What really that is, that China angle? And also in terms of investment, well, it's written on the slide here, cross-border, mostly big investment, around 5 to 50 million. 5 is a bit low. I mean, if you're looking for 10 million, you should not look at China because that is too low for them. A minimum investment with Chinese investors is up, I think, $5 million at least. So a round of 10 million is the absolute minimum they really would try to participate in. It must be much higher, normally speaking, for them. Seed investment or really a small A series for that kind of round, you better not look at China, actually. Now, the question, of course, how do you find out? And especially during these pandemic times, it's not easy to find out exactly what Chinese investor partners are looking at. And you can look, of course, on websites, and these websites you can find, but they won't tell you very often much because they're not updated. There's very often a trend nowadays that a lot of companies in China and so biotechs and medtechs and investors do not wish to update the website because they don't want to give too much information away to competitors. It's a very big trend we've seen over the last year, I would say. So it very often depends on personal contact, and then of course that's the trouble if you can't travel here. How do you create these personal contacts? I mean, we have in our WeChat account hundreds of contacts of investors and partners, and it really is updating them and talking to them that really gives you a good insight about what's happening. Typically also, if you don't talk with a certain party for half a year, that your contact person might be left the company, changed to another fund. That is very typical in China. It's a very dynamic world, and there's a lot of change in the industry for sure. But there is lots of smart money. There used to be a lot of dumb money, but there's a lot of smart money nowadays. The best funds are for sure international, very professional. They do very technical, very professional due diligence. And they have a lot of experience, especially in the United States, because many of them have lived there for 10, 20 years. Or have studied there and came back to China. So many people in the sector in China have a lot of US exposure and studied there. Less in Europe, so it's not really known for them, but US absolutely. And they know what they're looking for. They know the latest trends also. So then if we discuss about the financial or strategic investment, what they're looking for. So from all the 6 cases we did last year, there's only one actually, and this is a case of a Belgian company called Miracor Medical, who did a 24 million D series. And there a Chinese investor did invest as a pure financial investment, but that is rare. Most Chinese funds will act actually, so although they're financial investors, they will act as strategic partners. They would say, well, we'd like to invest in your company, but we would also like either to have a license for Greater China rights, because we can build a new co around that. So they put in the money, they license in the product or whatever it is from Europe, and then they build a team. Or they say, well, we look at a very interesting portfolio company which you can work together with, so we'd like to invest, but then also it'd be good if you could license or partner with our portfolio company. So that is really important for the funds, and 95% of the funds will have this angle. So although it's a fund with a very financial angle, they have a very strategic mindset, basically. So as I mentioned, from the 6 cases we did, this is the only one where it was really a pure financial investment. Then, of course, that's important to remember. Then secondly, what's very important is also the China angle. Every fund will require a China angle. You might be the best company in the world, but if you don't have a particular China market, then it's always difficult for them, because they first and foremost will look at the Chinese market, which is the fastest growing market in the healthcare sector. And of course, that's where they can make the money. That's where they have all the best contacts and where their portfolio companies, most of them. And of course, what is the China angle? Funds will say, or partners, oh yeah, we need a China angle. What is a China angle? It could be very broad. Typical example is, of course, you have a very big unmet medical needs. And there are many unmet medical needs in China. And one of the deals we did last year was actually signed this year, was with a British listed company, Futura Medical, who have developed an asset for erectile dysfunction. And that is a big issue in China. So there was this fund called Gohai who did invest in the company, and at the same time set up a joint venture with Futura Medical, and will be there responsible for the development and approval costs of the product in China and the future commercialization. So it really depends. It could be a greater unmet medical need here than, for instance, in your home market in America or in Europe. That could also be the opposite case. There might be some diseases which, for instance, will not be very much likely in China, but more in Europe. Typical example is MS. MS is a very typical, more well-known disease in the Western world, less in China. It is, of course, also underreported in China. But if you would go with an MS asset to China, there would be most likely less interest into it because it is underreported and the thing is not a big market. So that's another example which an asset in China would probably make less chance than other assets. What are the focus areas? It's very broad, as we saw the presentation from McKinsey also. Oncology is always big, but it starts to branch out much more towards other fields. Ophthalmology is very hot at the moment. Everything related to diabetes is also very interesting. As you know, that Chinese become very obese, become overweight a lot, because as you know, maybe you don't know, but there are more KFCs in China than there are in the US. There are 600 Starbucks only in the Shanghai, so then you understand what the problem is. Fertility is a very hot asset in China, because China is facing a decline of population over time. So of course, that's something they need to increase. So these are very, very big problems for the Chinese government, for the Chinese economy as a whole. So that, of course, they want to try to solve with innovative medicine. What's also very important, very interesting, that's another deal we did, was signed last year, a messenger RNA company. Now, everybody knows now messenger RNA, of course, but that last year was a bit more difficult due to the beginning of the pandemic. But this is a Belgian company called Etherna, who is a clinical stage messenger RNA company, and it's a top company in Europe, who did a 34 million B series. Half the money came from China, which we raised. And they also had a joint venture with Grand Pharma, which is a very big pharma, Hong Kong listed company, a Chinese company in the pharma sector. So this is a very clear angle. They, of course, will target different medical needs, but of course, this technology is not yet in China in those days. There were no messenger RNA companies then, or good ones. And that was, of course, a very big gap where this company fit in very well. So this is another example of a very good China angle that you can create, basically. What we also see very often is that Chinese investors parties are always looking for first-in-class or best-in-class. Remember, money is not the issue usually. It's really, they need really top-class products. And that is still very much on the top of their mind, first-in-class, best-in-class, with a high differentiation. The fact is also that in China, the government is much more putting price pressure on different medicine. Most Chinese pharmas are very big in generics, want to go to innovative medicine, but are not very strong there yet, built an R&D team. And typically it's the biotechs, the China biotechs, who often do investment rounds of 50 to 100 million A series. That's very often the size here. They use half of the money to in-license product, because that, of course, creates value for investors. If a product is in phase 2 in Europe, of course, it can also easily go to phase 2 in China, basically. So it immediately creates much more value for investors. And of course, they expand their pipeline relatively fast. But you also see that some of the more established companies are start to move towards much more, let's say, earlier stage assets. There was a very long time, there was a very strong belief that Chinese investors were only for later stage assets. That is changing very rapidly right now. Many companies try to set up their own R&D facility, but of course it takes a long time to develop your own assets. But many of them also will want to in-license very early stage assets, because their investors say, well, you have already in-licensed some assets, phase 2, phase 3. We want you to go more early stage to create a broader pipeline to do an IPO. And one of the deals we did in March this year was being a Belgian company called Complex, which is a very, very innovative company, having this cell-penetrating alpha bodies, which is a brand new class of therapeutics, which did sign a licensing deal for 2 assets with I-Mab, which is a Nasdaq-listed Chinese company. And I-Mab, they want to go more to R&D. They are building R&D facilities, but they also want to in-license much more earlier stage assets. And this is basically a deal where Complex will develop a brand new asset for them, and at a certain time, they will hand it over to I-Mab to do the development and the clinical phases and trials in China. So it's a really good combination of how it could work together, actually. So they're looking for cutting edge technology, first in class, best in class, and it's moving much more towards earlier stage. So in a nutshell, basically, what you really need to know if you work with Chinese biotechs is that you need to create a China angle. In 99% of the cases, Chinese partner will be needed for successful commercialization. In some areas like IVF, like fertility, it's impossible as a foreign company to establish your own company, because it's a black zone, so to speak. This is, for the Chinese government, this is very critical area. So very often you need a licensing deal, you need a certain partner. In some cases, for medtech, for instance, Chinese hospitals are required, for instance, their quota, for instance, okay, 30% of your equipment used in hospitals has to be bought from Chinese companies. And of course, that means that if you are in that sector, basically, you need to partner with a Chinese company, and because they can sell to hospitals, you yourself will not be able to sell to the hospitals. So sometimes it is really required for to partner. And also, if you're not a big pharma or not have a reasonable size in the Western market, going yourself to China and try to do everything yourself, and the trials and the commercialization is really, really hard. I mean, it's much better choice to work with a Chinese partner who already has all the resources and the right people, basically. So an out-licensing deal is obviously the cleanest of all deals. Sometimes parties require a joint venture or bring another table, but very often it's always open for them how the deal is being structured. Co-development is a very interesting thing, like the deal I just mentioned between Complex and I-Mab, which is really a co-development deal that also starts to be much more as a trend. And incubation is, of course, very big, meaning that they say, well, we're very interested in your technology, we would in-license this into a brand new company, so the Chinese investor puts in the money, prepares a team, or matches it with a kind of a portfolio company, and the Western company, European company, brings in the technology, and that's the new co that they built, basically, where the Western company could have shares or just pay royalties and an upfront fee and all these typical license fee structures. One last question we have, and then we're going to end here, is that how do Chinese investors behave actually? And one of the questions is, do Chinese investors want to control our company when they invest in a European company? No, mostly not. They're mostly interested, or 99% interested in China rights or the Chinese market. That means basically they will take a minority stake in the Western company. They don't care too much about how you deal in Europe and US that they don't know very well. Just give us China, basically, we will handle it there. Very often companies ask us, what about my IP in China? Is it well protected? Well, I can tell you a story that if you talk to any Chinese investor, the good ones, and many of them are very good, they will ask very soon, what about your patent situation, what your IP position in China? If you don't have the right IP protection in China, they will not invest in you, because many of these companies, they invest in listed companies, they're big, they have a reputation, their LPs are big, they are really interested in the good stuff. They are not there to steal away technology. That is changing in China. That's really the old days, I would say. And then another question we often get as well, what about the global or China rights? Most Chinese investors will only be interested in greater China rights, as they call it. Global rights is rare. It's really exceptional, yes, but normally it's greater China rights where they help to commercialize. But global rights is usually not the case. And of course, it's very interesting for any European biotech and medtech. If you want to have an exit, or you want your board of directors will ask the question: if we give China rights away, what can we do with the rest of the world, and how will other investors look at that? That, of course, is the strategic question you have to ask. But in my opinion, it's really important that you will have a Chinese partner sooner or later, because surely it will evolve to the situation where the regulations will change and the Chinese government will try to promote their own companies, that they be active in certain fields where foreign companies could be less active, and I think that will be a definite trend. So having a Chinese partner will be more and more a trend of the future, I believe. Okay, thank you for all this.
Great. Thank you, Sven. So we are going to go over a couple of minutes here. I know we're ran out of time, but we want to address some of the questions that were asked. So one question, just real quickly, that's probably on everyone's mind. There was a question about whether we will share the presentations. Yes, I think most of the presenters have said that they can share those. So if you reach out to BIA after the event, they would be happy to share those slides for you. So one question maybe that we could start with that came in from the audience is related to reimbursement reform. And so I know Fang Ning spoke a bit at the beginning of her presentation about recent regulatory reforms, particularly related to NMPA, which is the China FDA. But we do have a question about the current status of reimbursement reform, and in particular, whether there has been any movement in China for reimbursement or greater reimbursement of innovative drugs. So, Fang Ning, I don't know if you want to handle that question. Might be helpful. I know Mackenzie's looked at this quite closely.
Yeah, happy to. So
maybe you can share your screen. Yeah, perfect.
Happy to. Yeah, so I think there are almost two sides of the coin. On the positive side, there actually has been clear improvement and progress over the past couple years when it comes to reimbursement from the public insurance fund. In particular, specifically for innovative products, you now actually could get listed or get reimbursed much faster after launch your products in the China market. Because now China has a national negotiation mechanism that actually takes place every year. So they have a cutoff window, but usually within 1 year or 1.5 years or so, you have the opportunity to negotiate to get your products in the market. So that's very positive. However, the flip side is because it's a national negotiation, you actually have to be willing to concede on price. So the price discount really depends on the number of products that you are competing, especially with the similar in the same MOAs. It depends on the level of differentiation, level of evidence that you can put on the table. So far, we actually have seen, right, it's a kind of a split outcome. For some Western firms, especially more multinational companies as examples, there are products that they're willing to go to a price discount to get listed, and certainly those products actually benefit from a faster volume uptake. There are also situations that they decide not to further lower the price. Therefore, actually, they would maintain and to pursue the private market. Now there's another pathway, right? So beyond, if you don't get listed, and then you, in addition to self-pay, which you can use patient access program as a way to provide some financial support. There's also an increasing channel. It's commercial health insurance. So this is certainly still relatively new in terms of the market share, but certainly it's an important vehicle that many Western companies are exploring, right? If in the case either you have not get your products reimbursed, or you decided not to go through that route, then you can actually really develop commercial insurance as a way to complement or compensate. Now, what does this mean for a specific product? Usually, we actually when we work with company, actually you need to do a quite rigorous modeling exercise to really figure out your top line, bottom line impact, and to be able to get to a little bit scenario planning to get to the answer.
Okay, great. Thank you for that. And I'm sure if you have additional questions on that, I'm sure if you follow up with Feng Ning, I'm sure she'd be happy to speak with you. We had another question, not too surprising, about IP. So I know all of our presenters, I think, mentioned IP, and there is, for those who don't know, a new China patent law that just went into effect in the last month or so that does add patent linkage in China. But this was particularly, if we could get some comments about how much concern Western and UK biotech should have about their IP in China. There was also mention in the question about HGRAC, the Human Genetic Resources Administration of China, and what kind of requirements might HGRAC have for doing clinical trials in China. Maybe Sven, maybe you could talk a little bit about this from a partnership and an investor perspective. I know you mentioned IP, but how is it getting better? Is this something that's still a major concern for European biotech?
Well, I think, as I mentioned, many European biotechs will have this question, which is a valid question, because, I mean, we have to be honest, China has had a bad reputation in the old days, but things have changed dramatically. And I can tell you from our experience now over the last 2 years, we never had any case where we were even in doubt about there was some IP problem, or, of course, we was a bit careful. I mean, we have to open in every case, right? But we never had any real problem. The cases we closed also the year before, last year, there was no issue. People are quite happy with the Chinese investor. But of course, it's also a way of selecting the right parties. I mean, there used to be a trend that, and it still happens, that there are many European companies, they meet the first guy in say in the UK embassy and the Chinese, and they go along with it. That's not how it works nowadays, right? You have to be, select the right partner, and that is always very critical. But of course, more difficult now because of the pandemic. But in general, we never had any problem. The laws are being relative, are much more stricter. As I mentioned, Chinese investors, Chinese parties, they have, very good investors behind them, listed companies, with a reputation. They really have a long-term view. They're not interested anymore in a quick win. That time is finished, I would say. And healthcare, of course, is a long-term investment, right? It's not something short-term. So that dramatically changed. So from my experience, there was nothing, never really happened, or never even heard about a bad case until this very day, I must say, in this sector.
Yeah, I would say from BioCentury's perspective, we've been following, the China industry for quite a long time, and there are certainly areas that can be improved, but the amount of improvement that's happened on IP protection in China in recent years is quite significant. And I would say, like anywhere, finding the right partner is really important. And if you find the right partner, they'll be just as concerned about IP protection as you will be. We are just about out of time, I'm afraid. I know we went a little bit over, but I really wanted to thank our three great panelists today. I wanted to thank BIA for organizing this event. And then I did want to just remind everyone that BIA is supporting the BioCentury Bay Helix China Healthcare Summit in November. So if you're a BIA member, you can get a special discount for that. You can visit biocenturychinasummit.com for more information. So I wanted to wrap it up. I wanted to thank everyone for joining us today. And we very much hope to hear from you as well in the future about China-related topics. And have a good day and a good evening. And please stay safe.